And what's going on with this next generation new platform vehicle? I mean, how optimistic or not optimistic are you about it? I'm hearing some people say it's supposed to compete with like a Honda Accord.
Yeah, totally. And with regard to the next generation platform, we think it could be a very, very big deal. It's the car that's going to get Tesla to its long-term goal of about 20 million units. And they just did 1.8, right? So that's a lot of growth going forward. And we think that's going to be the mass market vehicle that takes Tesla to the next level.
Look, I agree, and I listened to the earnings call, and Elon was actually quite quick to bring up the Model 3 ramp. He said it was the worst 3 years of his life. He said it was hell. And he also said that this next-gen platform manufacturing line is going to be revolutionary, unlike anything we've seen before. But he said that they're doing it in Austin because he knows that the engineers working on it, including himself, are going to have to be literally sleeping on the factory floor again. If he learned anything from the Model 3 ramp, it's that making a new product at scale is extremely difficult. And so everybody's really butthurt that, we're not getting production of the next gen vehicle this year. But I think what they learned from the Model 3 ramp is the longer you spend designing the manufacturing line, the smoother things are going to go. And this really is the vehicle of Tesla's future, as the guy just said. This is what gets them to 20 million vehicles. Perfect the production line and let the machine that builds the machine that builds the machine just hum along for the next 50 years.
Forget the stock name. They missed on expectations around revenues and earnings. So of the 10 or 11% it's down, that's probably a third of the reason. To me, the two-thirds reason, the other two-thirds, is that when it comes to guidance for 2024, that margins, we're not sure. So Elon was being honest, but the market doesn't want lack of clarity, and also volume growth. So I think the stock is down appropriately, being the lack of positive guidance, and they missed the reduced numbers to begin with. I think that as in short term, the stock is in no man's land. You want to see that stock base out at 180. If it can't base that, you're going to be in the 160s. So, rule number one, do not buy a stock on a day like today. You have to see that flush out. As you know, I entered the stock around 120 and 150. I sold calls on some of those that got called away at a higher price. I'm just in the stock right now. I would look over the next couple of months. So I think it will be dead money over the next couple of months. Once things settle, I'm long-term bullish on the name. I think the manufacturing prowess is incredible. But right now, you really just can't touch this name because I think the sellers will continue and the price revisions are going to continue to come out the next couple of days.
Hey, Brandon, it's Josh. Good to see you. I wanted to ask you what percentage probability you would place on the idea that there's going to be some other vehicle through which Elon Musk expresses his next generation technology ideas away from Tesla. Maybe it's at Starlink, maybe it's at SpaceX generally, or maybe something we haven't thought of, like the Boring Company, that he files an LLC and they're off to the races. Is that like a big risk, and what percentage probability would you place on that risk?
I don't think it's a big percentage at all, because there are full self-driving ultimately is where the AI technology is. And so he talked about on the call, no other automaker saying, hey, can we license your full self-driving? That is where all of the AI technology, that's where all the amazing engineers there. I think that is a low probability. To put some context, Josh, on your comment about what he said the other day about maybe I'm not going to be interested in doing AI or new projects here because I don't own enough of it. He was asked about that. And what he says is that, and I get it, but he sold the stock. He said, I don't want to have control. I want to have influence, because I don't want an activist shareholder who knows nothing about the name, except for it hasn't done well over X amount of time, coming in and exerting more control than he has. So I think over the next few months, the board's going to have to work something out, because Elon and Tesla are inextricably combined. You can't have one without the other. But I do not think he's going to take away from Tesla to just go innovate somewhere else, because it's too embedded in the FSD.
What a bizarre question that guy asked her, and she did answer it really well, but everyone needs to calm down about this Elon situation and stop taking things out of context. Elon's tweeted about it. He's got a good relationship with the board. They're waiting till the Delaware case resolves so that things can get settled. And Elon showed no signs to me that he's not fully invested in the future of Tesla on the earnings call last night. He sounded like he was in good spirits. He said that last night he was in the Optimus lab until midnight. He still sounds very interested in the company. Let me ask you guys this. Why would Tesla be going all in on FSD and Optimus in the way that they have been? You know, in 2023, they cut the prices of their vehicles dramatically. On their earnings call yesterday, they didn't even give guidance. They just said, hey, we're an AI robotics company. They wouldn't be making these kinds of strategic moves if they didn't believe FSD was going to be widely successful. Elon wouldn't be pushing for a compensation plan right now if he wasn't truly afraid of what AI is going to become, if he wasn't truly afraid of someone like Fidelity coming in and taking a majority of Tesla and having control over this incredibly powerful technology. Elon said he wants to be an effective steward of this technology. He needs to make sure that it's in the right hands, doing the best thing for society. This is how his brain works. And if you don't know that about Elon, go and read one of the biographies on him. This really isn't about money. This guy spent last night surrounded by Optimus bots. He sees firsthand what can happen.
Joining us right now is Colin Langan. He is Wells Fargo equity analyst. And does this come as a surprise to you because the street is selling the stock down today?
I mean, I think yesterday we got a bit of a trifecta of bad news. You have the comment on deliveries. I don't think that was as surprising. I mean, we kind of could see demand has been slowing a bit. I think the margin commentary was a bit of a surprise. They talked about sort of hitting a natural curve limit on bringing costs down. It's a big problem because they just cut pricing in China and Europe a couple weeks ago. So if you can't bring costs down, those pricing just hits your margin right away. So it feels like margins are going to come down next year, very likely. And then he also didn't back away from the comment about trying to get a 25% stake, which raises concerns about dilution if you're a shareholder here.
What do you think in terms of whether it's more important to have not get diluted or to have Elon Musk there developing AI at Tesla? How would you come down on that?
I mean, the stock trades where it does because you're not paying for the core auto business, you're paying for the future ideas, and that is Elon Musk. But it would be pretty frustrating, I think, as a shareholder to, have to sort of dilute yourself to keep him around.
For me, it's an easy answer. You give the guy a compensation plan, and then you continue to get the luxury of having talent come from all of his 6 companies that he operates, which are all cutting edge in terms of AI technology and engineering and manufacturing. So you get your pick of the litter when it comes to just what guys you need on what projects. And then it also comes from new talent coming out of university. Elon Musk, SpaceX, and Tesla are the number 1, number 2 most top places that engineers want to work. So if you lose Elon Musk, you kind of lose that luxury as well. For your shares to actually get diluted, Elon's going to have to hit all of the tranches in this new compensation plan. And by that time, Tesla will have already done a 5 or 10x. So I think as a shareholder, you're going to be freaking smitten and you're not going to be upset about a little dilution considering you've just 5x your money. And I think that little bit of dilution is going to hurt a lot less than if Elon was to step down as CEO. I think that would have a much more painful impact on your portfolio.
It's not that people don't want. We have tons of we have lots of people who want to buy a car but simply cannot afford it. As interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward.
Look, you need communication. What the margin guidance is ultimately going to be, how many more price cuts. And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool. And I think that was a conference call. You're going to see pressure on the stock. The long-term story doesn't change. And Tasha, I'm sure you'll agree. But in the near term, the bears win.
I'll put this question to both of you, Dan, just because you brought this up a moment ago and we mentioned this in the intro. Is it as simple as interest rates not being in Tesla's favor, or is there something else at play within the broader EV demand landscape? I'll go to you, Dan, first, and then I'll get your thoughts, Tasha.
Look, demand overall has actually been pretty strong relative to, if you think about how bad it could have been, 35% plus growth, call it 18, 20% this year for 24. The reason the stock's down, it's because of margins. And I think 80% of the reason the stock's down is communication, 20% results.
I'm confused because did Tesla not communicate with us? They came on and they said, hey guys, our prediction for next year is that our deliveries are going to be notably lower than our 50% compound annual growth rate. So why is everyone getting upset? Well, Dan, it's not because of communication. You're upset because of the results. It must be because Tesla did communicate. And if everybody wants to call Tesla a car company, then how can you get upset that Tesla is dealing with the cyclical car industry? Interest rates are high, so Tesla had to drop prices. But everyone's getting upset about that because all the other OEMs haven't dropped their margins and they've kept their prices high, but that's because those companies actually don't care about growing their volumes. They're fine to sit back and advertise and try to just squeeze people for all of the money that they've got. Tesla's a different story. So it's really just people are being a little bit back and forth about it. They say, oh, Tesla's a car company, but then they don't treat Tesla like a car company because they're expecting Tesla to continue growing volumes and keeping the margins at the same point. So I think Tesla executives acted like complete adults. I think it's wrong for Dan to go on all of these media platforms and say that they acted like preschoolers when they just told us what's going to happen. I'm not sure exactly what Dan wanted to hear. Tesla just gave us the truth. They said it's going to be notably lower, and that's the end of it.
A new model, is that really going to spur demand the way that some investors were hoping for or might have anticipated?
Yeah, well, I think, Dan said it, right? I think that the focus should be on the long term here. And a lot of investors currently right now are focused on the short term. Hey, look, Tesla's not immune to changes in interest rates, right? But when you look at the auto industry as a whole, they are, one of the only electric vehicle manufacturers that has this profitability. And we heard on the call that they're able to reduce costs at really an unprecedented rate. One analyst thinks it's over 10% a year. And they said they see further opportunity for cost reduction. So, they've cemented their lead in electric vehicles. I think if you want to talk about the next year or so, we should be talking about robo-taxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability. And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. General purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole. So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
Now we are talking. Holy smokes. Like FSD V12 just rolled out to the first customer. Elon said on the call it's going to be rolling out to all 400,000 beta testers in the coming weeks, were his exact words. He also said, in regards to what Tasha just said about them dropping the cost of goods sold, Elon said it's crazy and it boggles his mind that for every 1% that they take away from the price of their cost to make their vehicles, that's $1 billion in savings. The goal for this next-gen vehicle, if their cost of goods sold right now is $36,000, would probably be to get the cost of goods sold for the next-gen vehicle down to about $18,000, sell it for $25,000. That's a healthy margin, but then you also get the SaaS, the software revenue from the robotaxi, and that's the path to the most valuable company in the world. And it's also pretty insane that Elon said Optimus could be shipping next year. That's the same timeline that he gave for the next gen vehicles. So if you saw my video a few days ago asking what's going to come first, FSD robotaxis or Tesla bot, and I was split down the middle, and there's confirmation these things are coming at about the same time. I know a lot of you in the comments had the same opinion.
Tesla's been the lead for a long time. And by the way, it's not just about cars, right? It's about AI. It's about compute. And Tesla is years ahead of the competition there. What they're building out in terms of AI compute is going to rival many tech companies, let alone automakers. Automakers aren't even close. And you cannot talk about Tesla without talking about this robotics opportunity. And so to give you an example, right, Tesla has millions of cars on the road. They're able to access data from over 2 million miles of full self-driving behavior from customers per day. No other automaker can pull that information off of their customer cars. This is unprecedented, right? So when you think about solving for autonomy, which is the future of the auto market, and if you're not there, I don't even know if you can survive the next 5 years, 10 years. So I think that's where Tesla has this lead. And I think that we see videos of these vehicles where people don't have to intervene and it's full drives, right? So it's already possible in specific scenarios, California locations. I think that they could launch a ride-hail robotaxi service a lot sooner than people expect. And then, the margin fear is over, right? Because it totally changes the business model. This is going to be a lot more profitable than their base vehicle business.
Tasha came to play today, and in regards to the data, the miles driven that Tesla has access to, they released a graph on their Q4 earnings report showing that in the next couple of months they will reach 1 billion miles driven on FSD. And if you guys missed yesterday's video, I react to Omar's driving on version 12 of FSD, where he literally goes from parking spot to parking spot, curb to curb, through San Francisco several times. So Tasha's right. I believe that robotaxis in San Francisco is right around the corner. I mean, you're seeing it on Omar's videos. End to end, curb to curb. It's like, it's insane. He doesn't even have to touch anything. Yeah, he has the nag, but that's it. And the nag is just for safety. Tesla knows that they are right. They know they're taking the right strategy. That's why they literally laughed at some of the questions on the conference call yesterday. They're not sweating. Everybody else is. So just hold on. It's not financial advice, but that's what I'm going to be doing. I'm going to be holding on. We see how fast Tesla rises when it does. It always takes a couple of years, but that's because Tesla is incessant on making fucking awesome products. So shout out to Tasha Keeney for staying positive in a sea of negative analysts. And I hope you guys enjoyed today's video, and I'll talk to you later.